Ladies and gentlemen, hello and welcome to Nadex, to a very early morning session. My name is Philip and I will be your presenter for today's webinar. Today we want to have a look at Forex on Friday, short-term Forex trading with binary options. Just as usual, you can have a look at your webinar interface and you can see that small questions box, and please make heavy use of that box. Let me know anything that's on your mind, any market that you want me to have a specific look at, and yeah, you get the picture. Anything that's on your mind, I'm happy to answer those questions as we move through the webinar. Right now I would appreciate a very short yes or why in that questions box, just to let me know that both the audio and the screencast are perfect. Thank you very much everybody, really appreciate it. Alright, so today's webinar is scheduled to run for about half an hour. We will finish after half an hour. However, I will stay online and be available to you. For those of you who will still stay with me, I'm just now flipping back to my charts. And Gary, you're absolutely welcome. That's what we're here for. All right, British pound, Japanese yen. All right, and just by looking at that chart here, I hope you can see why I really like that chart. That's the kind of trend that I'm looking for. I want all our strategies here at Trade with Position are trend following strategies. Why? If I see a chart structure like that, I have that idea that what is in motion stays in motion. And if the market has been going like that, I don't want to step in front of that raging bull. I don't want to step in front of that train. I think that train might be just going on to the next station. It might be just continuing up the next leg higher. And I want to participate in that move. I don't want to call tops and bottoms. I want to participate in that move in the next on the next wave. And again, let's start with the higher time frames. Let's have a look at the monthly. The monthly clearly is in a downtrend. We're making lower lows, and this is now just another lower high. However, it's not over yet. We still see here some bullish momentum going on. So the picture from the monthly chart is rather pointing to the downside. However, that candle here was pretty bullish, and yeah, we will have to wait and see what's going on there. Momentum here is on the bullish side. Trend is still down on the monthly. The weekly chart now has given us clearly a new higher high, so clearly we are no longer here in a downtrend on the weekly chart. We see that our moving averages have started to already to fall into place. The 10 is now above the 20, 50 and 200 will still take some more time, but again a lot of bullish momentum going on here on the weekly chart. And looking at the daily chart, once again, this beautiful structure here, this beautiful push higher, very nice uptrend here on the daily chart. If we switch now to the lower time frames, and let's have a look here at an 8-hour chart. On this 8-hour chart, we can see something which is very close to what we at Trade with Precision call our trend flow setup. This is a push higher followed by a retracement and then a small bullish candle setting up very close to our moving average buy zone. And this would be, for example, this small candle here. Yes, the candle is red, however it's still a bullish candle. Why? Because the push for lower prices has been completely rejected by the buyers. And everything that the sellers did was reversed by the buyers, and the buyers have been able to close that session pretty near the high of that session. This is why this small candle here, sometimes also called a hammer or a hanging man hammer in this context because it's after retracement, this is rather bullish in that context. Now the potential setup that could be tradable here might be a breakout of this level here, a breakout above the high, and then shooting for higher prices. Now that's the 8-hour chart. Let's have a look at lower time frames about what's going on there. And yeah, pretty much the same picture here on the 4-hour chart. Going now a little bit sideways, but some more momentum pushing here higher. we can also see that this recent high here in price has been a slightly higher high, so we have convergence still going on here in our indicators. So currently British pound to Japanese yen looks definitely a good bit bullish to me. Now switching back to our Nadex contracts here. British pound, Japanese yen, here we are. Alright, so if I think price might be going higher, how can I find that contract which is currently just trading at the money? I'm going here to my bid-ask column and I'm looking for the one which is pretty close to 50. Here I have one which is trading at 52 to 59, so that one should be pretty close to where the market is right now. I think the market might be rising, so I might be interested into just buying this contract. I'm clicking on the offer price. The trade ticket already comes up with buy selected. I'm going for one contract, buying this contract now for about $59. This is my maximum loss. If I buy this contract, I cannot lose more than I've risked, or than I've paid. If this is a winning contract for me, my payout will be $100. $100 minus the 59 I just paid for it means my maximum profit would be what remains, 41. That's a reward to risk ratio which is smaller than 1-to-1. That's one of the reasons I think that might not be that perfect sweet spot for me. Again, it's just my personal preference. In the end, it comes down to what you like best. If you think something like you want to see a 2-to-1 reward versus risk ratio, and that's your line in the sand, perfectly fine. If you say no, 0.9-to-1 is still working for you, again, it's your call. So this might be here one way to trade this market. Another one might be to say, okay, I think we will see that price breakout to the upside, so I don't have to buy something which is trading at the money right now, but rather I might be looking into buying something which is a little bit further out of the money. So I might be inclined to look, for example, here at, why not look into that contract? This now would be the 147.2, and you can see here the old high had been at 148, so this is definitely still a lot of headroom until price hits this level. So this contract could be in the money without price having the need to make new higher highs. So this is something in between a very aggressive trade and a very conservative trade. So it's just middle ground. In the end, it comes down to your personal risk appetite. Now, buying this contract now I would have to pay $24.25. My maximum profit, $100 minus what I paid for it, 75. Obviously, 3-to-1 reward to risk ratio, much better, much nicer. However, the probability that I will hit this price target, that price will be trading above strike price at expiry, is definitely smaller. How big would that probability actually be? Thinking about this price again as delta of a conventional option, that delta can always be interpreted as the probability that this option will be in the money at expiry. And it's just the same way here with binaries. You just take the middle price. So we're trading between 19 and 26. So that's 7, 3.5, 22.5% probability roundabout, just a very rough approximation that this will be a winning trade, just from the mathematical statistical model underlying option pricing. With all our trading strategies, with all our checklists that we use here at Trade with Position in identifying those potential trading opportunities, we see that we have an edge in the market, which means we should be winning more often than we lose, and we should be winning bigger then we lose. And for that reason, it's interesting to see what the mathematical probability is. Would this keep me personally out of taking that trade? Would I accept this as the absolute probability that this will be the case? No, absolutely not, but I will keep it in mind. In the end, picking the right binary contracts is always an act of balancing. You have to balance the probability that something will be in the money or out of the money at the time of expiry, and the potential reward to risk trade, reward to risk ratio. So having an outstanding reward to risk ratio on a trade is very nice, but if the probability is so small that, yeah, there isn't really, what's that saying, a snowball's chance in hell to actually make that, to hit that winning scenario, it's probably not worth it. You have to balance that stuff. Now, Joe's asking, do you look at a trade out of the money for a scalp? Multiple points here. First point, for a scalp. Scalp, very short trade, almost in and out. Now, in and out within an instant. Just to explain the terminology here. Very important first point is here to note. Yes, you can definitely do that. You can definitely trade in and out of your position easily. You don't have to hold your position until expiry. So what Joe is asking or suggesting here definitely works, which means you can open that trade, wait for a small change, wait for a small move in price, and get out of that trade. You don't even have to sit in front of your screen and wait for that price level to be hit. The moment your trade is live, you raise the limit order to exit that position, and you're good. So perfectly fine here to use that for scalping. Now, would I use a trade? Would I use a strike price which is out of the money for scalping? I don't think so. I personally would think that I would rather trade something which is in the money, because coming back to my delta here, this is not only the probability that something is in the money or out of the money at expiry, but also this refers to how fast does the price of my binary contract here changes if the price of the underlying changes. And if I want to scalp, usually I want to have something with good leverage, which means I want to have something which moves pretty much as fast as the market or as the underlying itself. And for that reason, I would probably prefer something which is pretty deep in the money for scalping than something which is out of the money for scalping. Because here, for every point that the market moves, I just see here a 20% participation of that move, where in a where with an option contract where I have a price of about 80 to 90, I should participate with 80 to 90% of that movement. All right. Joe, glad we could help you there. Perfect, thank you. All right, so looking at the watch, so that might be one thing here to go for that option which is just a little bit further out of the money. But why always look just at binaries? We could of course also be looking at spreads. Let's have a look at our spreads here and have a look at British pound, Japanese yen. And we're looking at the daily here. Now, spreads are a little bit different from binaries. With spreads, you have to think about a range. You have to think about a range and a direction. Now, with British pound, Japanese yen, we thought that this might be a market that might be going higher. So we would be looking for something for a potential trading opportunity here for higher prices. The rule of thumb when you want to look into picking a potential spread would be And we'll see here those different price levels. You have always the floor, the lower level, and the ceiling, the higher level. Right now we're trading at 146.72. 146.72. Now what I'm looking for here is I want to find that spread which gives me, for a long position, which gives me a floor which is as close as possible to the price where I'm trading right now. Why? Let's pick this one here. That spread is participating in value across this complete range. So the lowest that this spread can quote is 145.65. This means if the market drops to 100, that spread will still be trading for 145.65. On the other hand, the highest that this spread can be trading for is 148.15 at expiry. So this means if price shoots to 150, 155 at expiry, the spread will be trading at 148.15. And within this range, price participates pretty much one-to-one with what the underlying market, in this case British pound, Japanese yen, is doing. Now my idea is I want to see something which is pretty much at the bottom right now, because I want all my headspace, all that clear sky above me, all that free room to participate in that potential push higher that I'm looking for, that I'm anticipating here right now. So I would pick something where the floor is as close as possible to where price is trading right now, and this might be really nice. For example, that one here. Now my maximum loss on that contract would be $110, and my maximum profit would be 140. I could find something where I'm trading right now which is just here pretty much at the floor level. The perfect spread would be that spread that gives me a floor that is directly where the market is trading right now for a long setup, or the ceiling for a short setup where price is trading. So this here is something in between. This might be a nice trade to participate in that move. Now let's have a look at another one and think why this might not be an option as good. We're trading at 146.72. Why not trade this one here? Well, the ceiling is at 146.90. This means the spread just has about 20 more pips headspace before it hits the ceiling, before it doesn't have any further room to evolve. This means that spread is pretty much trading at its maximum price. So it has a lot of potential downside, $220 for one contract, but the maximum profit would be just $30 left, because we're trading very close to the ceiling already. So this here definitely a choice which is much worse than the one we just saw before. However, if you think, yeah, this market will be coming down, this is no way breaking out to the upside, selling this contract might be a much better choice, because now your maximum loss would be just $30. That ceiling would be now capping your top. But the floor is far distance away, and yeah, risking just 30 in order to make 200, potentially up to 220 when price starts to drop until 144.40. Are there any questions on those spreads? Personally, I had a much easier time to get used to binaries. That's just me. I've heard stories about people who said spreads are the easiest thing in the world, and they are happy to much easier to trade than the other one. It's your personal preference and choice. I just want to make sure if there are questions on those right now, that we can cover those. But I think we're good. All right, so on the other hand, if you think you're really bullish, you might be looking into something completely else. You might be looking into one which is definitely still way ahead, 146.90. So it would still take some time for this level to go in there to even start to trade into that range. Buying one contract of those, maximum loss $19, maximum profit, however, $239. What would have to happen to cash in on that maximum profit? Well, price would have to trade up to the ceiling level of 149.40. So not only going to that old level here, but also shooting beyond. Is it likely that this is going to happen? No, probably not as likely as those other ones that we've just had a look at. It's your personal choice what you want to do here. Always think about what has to happen for that trade to be a winning trade, and what is my maximum loss, what is my maximum profit, what has to happen, and what are the probabilities of that happening. And those are the different elements that you have to balance and weigh for yourself and make sure that you find your personal sweet spot there. All right, this is British pound against the Japanese yen. Any questions on that chart? And if there are no questions, I would just be jumping over to cable to close today's list of interesting markets. All right, we seem to be good. Now, British pound, US dollar. Looking at the monthly chart, beautiful downtrend. We see lower lows and lower highs, and strong moving average pattern here, good moving average geometry, fanning, good separation, all are pointing in the same direction. Definitely overextended here at that point from our moving average sell zone, and we have started to see a small pullback happening here. However, this month's candle already has been bullish again. Has been pretty bearish again. I would have loved to see a pullback here deeper into our moving average sell zone. Personally, I would still consider this here to be overextended. Looking at the weekly chart, we have seen a pullback now into a moving average sell zone. Now, this is a gray area. Personally, here, the overall picture, I would still absolutely be happy if you said that's a downtrend. I can completely relate to that. Strictly technically speaking, I might be inclined to call this here a small uptrend. You could call these here higher highs and higher lows. Yeah, it's really a judgment call at that stage. It's the overall picture here clearly is to the downside, and as soon as we will make a lower low compared to this one here, this small maybe uptrend might be even over again. So next thing to note here is that when we made this lower low in price here, this was clearly converging. This was bearish convergence happening here, both in MACD and in RSI. So overall, the picture that I get here from the weekly start is pretty much bearish, even though this might have been here an uptrend. Looking at the daily chart, we start to see, yes, this is an uptrend, no doubt about it here on that time scale. And I hope you can see that those different time frames don't have to be in agreement, but can be an uptrend on one time frame, can be no trend on the next one, and can be downtrends on the next few time frames. It's still absolutely valid on those different time frames to see those markets doing those things. This is why it's so important to have the same picture, getting that same story from different time frames, because then suddenly all those different components start to pull in that same direction. And this is when we start to get really powerful setups. Higher highs and higher lows, but now just recently, this high here has been clearly a lower high compared to that one here. And at that moment, once price took out that high that we got here, which happened during the candle on the 14th of December, the trend has changed to a downtrend. So the daily chart now already is in a downtrend. 250 are in place, and won't take long until the 10 and 20 will fall into place there to paint that complete picture here. So clear downtrend, definitely more bearish than bullish. Trend has shifted to a downtrend. Overall, I see a lot of bearish momentum here in British pound against the US dollar. And now, if I start to look at lower time frames and look for potential trading opportunities there, for example, here on the hourly chart, I see again the price starts to break lower here. Moving averages have changed. Let's look at a higher time frame. Let's go to the 2-hour chart. Much cleaner chart structure here, and this here might be something like a trading opportunity to look for shorting setups here. So British pound against the US dollar on a 2-hour chart, and for a few final examples here, back to the platform. British pound against the US dollar, and let's switch back to binaries. And by the way, me picking that same time frame is just me and my personal choice. We can easily pick something else here. Let's go for that one here. You see that one is still good for about 1 hour and 4 minutes. Again, you have to balance how fast must price move in order to hit your winning scenario, and how much time do you have left in order to achieve, or for price to achieve and hit that goal. So always pay attention to how much time is left in those options. Here with those, it's just about 1 more hour left. Yeah, I think that we might be seeing a pullback here back to those lows here of about maybe 123. Let's just see. Let's say 123.9. All right, 123. Let's pick this one here. All right, so you see that's current. That one is currently here in the money. Price is pretty close here, 82.90. So a lot of money, or very high price for that option. And if I sold that option now, I would get $81.50, and that's my maximum profit. If in the end price drops below this level within this 1 hour remaining, and the market sees a very little chance to do it, so about 85%, then it will trade above this level, so just about a 15% probability that I will win when I sell this option short. However, if I sold it, maximum loss $18.50, maximum profit $81.50. Better than 4-to-1 reward to risk ratio. Looks attractive, let's put it that way. If you say, okay, I think price will be dropping, but maybe not dropping that hard, I might be going closer to the money. I might be thinking about selling this contract here. Now, very close at the money, and obviously I'm just getting $56.50 for that contract, which is my maximum profit. My maximum loss would be $43.50. I would have to do the payout of 100 and would just get to keep what I got. So that is net what I would have to pay here. You see, it's always about balancing probabilities and reward versus risk ratio. That's the instrument selection. At first, I always must see the market and what the market is doing. And only then, if I find a market which is interesting, which is moving, and which gives me a pretty well-defined setup, only then, personally, I will be looking into, okay, now how do I want to trade that setup? All right, that's it from my side. Do you guys have any questions for me? Joe, yes it is. Joe has been asking whether that session was recorded. Yes it is. All right, if there are... Joe will let you know. You'll find it, no problems at all. We'll make sure of that. All right. So if there are no more questions from your side, then yeah, once again, thank you very much for attending and for hanging in here with me until the bitter end after 1 hour. As usual, after this webinar, there should be a short survey, so any kind of feedback that you have for us there, which helps us to improve those sessions for you, would be really appreciated. And yeah, once again, for me, it's been a pleasure. Thank you very much for attending and the great participation. And now to all of you, have a very great trading day. Happy trading. Take care. Thanks again, and bye-bye.